Good morning, good morning. Dangote and BUA Groups, two of Nigeria's largest industrial companies, have agreed to stabilize the price of cement without any increase in the near future for all contractors handling construction projects under the renewed hope agenda of the Nigerian government. Here is what Abdul Samad Rabiu, the chairman of the BUA Group, said to reporters after a meeting with President Bola Ahmed Tinubu. Alhaji Aliko Dangote of Dangote Cement approached me, and I concurred with him that we should do everything to support Mr. President's renewed hope agenda. We are going to freeze the price of cement for any contractor that is involved with the renewed hope project or projects, and that's according to Abdul Samad Rabiu, the chairman of BUA Group. Now, President Bola Tinubu has reaffirmed his administration's commitment to ensuring the local production of building materials used in the country to accelerate Nigeria's plan to revitalize aging city centers. Tinubu, who spoke at the 65th anniversary of the Nigerian Institute of Architects in Abuja, said, and I quote, "Our efforts are ongoing to revitalize aging city centers, adopt sustainable urban layouts, and integrate smart technologies to manage rapid urban growth." End of quote. Mr. President went on to say that we're supporting the development of private sector-led clusters for local building material production, which will create jobs, reduce costs, and promote self-sufficiency. End of quote. And joining me now to discuss this development is Abigail Alabi, Sub-Saharan Africa industrial goods expert at Vetiva Capital, as well as Ayo Ibaru, who is the CEO of a NorthCourt Real Estate. Good morning, Ayo and Abigail. Thank you very much for coming.
Good morning. Thank you for having us.
Good news. Ayo, let me start with you. How do you feel about that statement from Ahmad Rabi?
It's always good when you see a bit of a patriotic capitalism. Now, some might say it's approaching the borders of price fixing, but then again, they are committing as the market leaders to take the hit for whatever macroeconomic circumstances ordinarily would have forced them to move the pricing above 10,000 naira per bag, if I remember reading the article correctly. Now, it also does discourage a bit of price discovery, and then also new entrants from coming into the market. But then again, it's for a good cause, and it's restricted to renewed hope estate contractors only. Now, in terms of ensuring that the benefits accrue only to those projects, there would need to be a bit of monitoring so that we don't have, people using good prices for non-renewed hope estate projects.
Abigail, how do you feel? Do you think the government needs all the support from the private sector it can get? Because from all indications, look at the budget, it doesn't look that the government has every naira, kobo, or dollar on the table for every project.
True. So I'll come from a finance standpoint to just buttress this point. So this is good. So it's a double-edged sword. While this is good to improve infrastructure demand and also aid or support the government when it comes to infrastructure development, this is also probably going to affect profitability margins for companies or cement players because right now they cannot increase or they cannot pass on this increased cost in terms of pricing when it comes to government demand of cement. So unless there's an incentive, a tax incentive or something to aid or support this fix or this freeze of pricing, we'll most likely see this affect EBITDA margins or this affect profitability margins. But I think so far, since this is just restricted to contractors related to government projects, it's a trade-off, or it's a strategic trade-off between long-term growth for demand and also cost-wise. So I think it's a good one, if I would say.
In terms of cost to the government, Ayo, do you think this will make some impactful savings in terms of cement component of government projects, whether they are real estate, whether they're roads, bridges, labor?
So depending on the project, the cement costing contributes anything from 30 to 40% of the entire cost, and then depending on the model being used by the construction contractor. So what this does is it allows for long-term planning, and long-term planning means procurement of construction materials can be done in bulk, and then we can do forward contracts and execute them quickly enough. And, for all the flack the Nigerian government has had to take, when you see commitments like this, it does encourage a bit of activity. Now, there has to be a follow-through, which is we need to start seeing projects being executed as a result of this agreement between the market leaders. So yes, it will put something of a lid on how fast costs can go. And I think it's something that we should be happy about.
So if this is a 1,000 naira project, cement is about 30-40% of that,
yes.
and both Dangote Cement and BUA Group says, look, we're going to reduce the cost. They haven't specified by how much that will be, but that will be some cost savings for the government.
I mean, if you don't mind my coming in, the chairman CEO of BUA Group did say that it would be restricted to renewed hope estates, and that's what this pricing will work on. Now, we know the presidency is trying to get around 25,000 houses, so we can easily do that calculation and then deconstruct the costs, and then we have an idea of what the kind of cost savings are. I mean, this is reminiscent of post-World War II Japan, where there was so much destruction and we needed housing en masse. We didn't have the time to do a bit of nitpicking you do in your average cost economics class, right? So the idea here is to aggregate these costs and then ensure that the costing or the funds saved are not held by the developers in terms of expanded profit margins, but then passed down to the end user in terms of reduced pricing per unit of housing. Yes, so that's really where the shock is.
Very interesting. But let me just play this for both of you, Ayo and Abigail, because last year, Mr. President, at a media chat, says he's not interested in price fixing. As it were. Let's listen to that. I want to take your reaction on that. Let's take that up.
Will you also consider price control? Because it's like people are just doing what they like.
I don't believe in it. Sorry, Babajide, I don't believe in price control. I don't.
What can we do, sir, to bring down
We just
food prices?
continue to supply the market. We work hard to supply the market.
But there are middlemen who are making life unbearable for them.
Well, they will. You see, it's a question of supply and demand. It will come to a stage where you cannot hold no more. It will come to a stage. The economic variables will work against you.
Okay. Let's come back to that, Mr. President. Ayo, let me start with you. Sorry, Abigail. Let me start with you on this. Let me have it. Is there a contradiction here now that the cement, two of the largest cement producers say, look, we're going to hold prices for renewed hope housing projects, vis-a-vis what will be attainable on the market for anyone else, for Ayo, who wants to build his own housing estate?
So I won't say there is a lot of contradiction, because according to what he said, which is right, in a free market or in a capitalist economy, the prices are determined by the forces of demand and supply. And this is supposed to ultimately reflect competition, impute cost, and also demand. So I wouldn't say this is a classic case of price control. Like I said earlier, just a strategic trade-off where they would intentionally freeze prices for a particular set of people to also get long-term benefits in terms of increased volume as well. So, I mean, both sides are also still benefiting from this control as well. So, like I said, it's not a broad-based impact that affect both the retail consumers and also like all government contractors. Just a specific set of people who would benefit from this and also benefit the cement players as well.
Ayo, is this a case of PPP, public-private partnership, that the government says it's always want? That handshake across the table. This is it.
So both saying classical economics, Keynesian theory, yes, does suggest that we are not to tamper with market forces and there to, but where has that gotten us so far? It's gotten us increasingly high prices because profit maximization is the key objective. Now, I would have to go with what the president is saying, because in this instance, it seems, as far as public information is concerned, that Alhaji Dangote and the group CEO of BUA had a conversation and said, you know what, why don't we come together again as patriotic capitalists and see what we can do for a specific project. Now, price fixing, as far as I think the questioner there was driving at, is where the government comes out and says, I'm not really interested in what your inputs are. I really don't care what the challenges are. Your price per bag of cement must not go above this. That's not what's really happening here. It's a case of market leaders saying, we're going to freeze prices, not for the entire industry, not for every project, but for specific projects that are... It is not a blank check by any stretch of our colorful imaginations, no.
So, for example, it's a 200,000 units. It's just going to be on those 200,000 units under the renewable agenda.
Now, we have to ensure that these per bag prices are deployed to these projects only, and not some, luxury apartment, villa. Exactly.
You don't want to see them in Lekki, Ikoyi, Axis, where folks like you.
To be honest, look, we are dealing with a housing deficit that is, it's almost galloping at this point. So I'm not entirely sure I'm fully excited.
I think between Dangote and BUA being two listed companies that the pride is as exchange-quoted companies would want to see transparency, would want to see integrity in all of this because it's got to reflect one way or the other. They've got to report back to investors and shareholders and say, look, we supported the government with XYZ for so financial year or years. So this was what happened.
Just to add to that statement, what you can see this as is CSR on a national scale. And I'm not sure of the investor class that would see this type of a gesture and consider it
giving back.
Yes, and then consider it a bad idea, especially as we do know this will have some kind of a knockoff return in the future for both organizations.
Abigail, so now I just touched about the input cost, and energy is a major cost here. So how do you think this will play for both BUA Cement and Dangote Group, the two industries, as far as this initiative is concerned, this handshake with the government?
Okay, so as you said, energy costs cement production is one of the major intensive sectors that we have, and they are heavily reliant on fossil fuels like coal, gas, and so far in response to this, we have seen increased investment in alternative fuels like biomass and also industrial waste. And there's also something called the thermal substitution rate, which refers to the percentage of cement production that is used or that is derived from alternative fuels other than a traditional fossil fuel. And for both players, for Dangote Cement, you saw that for their Q1 2025, the thermal substitution rate was about 9.8%. And we've also seen the federal government also improve or increase investment in CNG initiatives as well. So last year, we saw announcements and, like I said, a handshake of cooperation with the cement players to also improve CNG distribution and also CNG initiatives, which has transpired, which has also trickled down into their financials at Q1 2025. And we saw operating expenses for these players also decline because of this increased initiatives in CNG. So I still believe that the government is also in the business of also trying to support the cement players, but also ensuring that input costs are still very much curbed or managed, given the fact that we're currently in a high-cost environment. So, while they don't want to also affect their revenue, they don't want also to increase the already ballooning costs that they're already experiencing, and also, at the end of the day, affect margins. So they don't want to affect them in both ways. So they have to come in a certain way to also ease this pressure through initiatives to reduce input costs. And that's what we have seen so far in the recent times.
Okay, so are you folks in the real estate developers, what are they doing about their energy mix? What are they bringing to the table?
Considering the infrastructure gaps as far as power is concerned, regardless of the band you're operating in, developers and indeed the entire construction framework is investing consistently in solar power. And we do have an in-depth study on that in our half-year report out in a couple of weeks. So be free to download on our website. We did cover the impacts as we saw in the study in Romania, in Germany, in Bangladesh as to the benefits that developers get for investing in solar systems. Sometimes projects save as much as 20 to 30% on their energy costs because they are going into solar investments. And even when you do a street survey and you just speak to most people who have been able to buy such systems, it's really where a lot of investment is going. Again, for large-scale projects, it does attract some commendation when you have your LEED or BREEAM or IFC Edge sustainability certification. It does suggest that as a construction contractor, as a developer, you are thinking ahead as to how to keep the environment sustainable, and it's really the way to go.
So, Abigail, when we talk about, Mr. President wants to see building materials made at home, made in Nigeria, roofing shades, nails, other things, and the plasters and the paints and what have you. So when you look at the market, the trading board of the NGX, for example, when you say construction or building material sector is dominated now by cement companies, so in a manner of speaking. So how do you think this is going to happen? How quickly do you think it's happening? When we say we're building a home, well, we have to think about the WC and a lot of other things. It's not just putting up a building without windows and things like that.
Yeah. So how soon will this happen? It also depends on the cooperation from both parties as well, especially when it comes in terms of making the business environment also very conducive for players to also operate. So first, I'll be speaking about the macroeconomic indices. Are we having a stable exchange rate? We have that. We've had that so far. But is this going to be something sustainable that can also aid the business environment for these players? Number two is inflationary pressures as well. We have also seen high cost of building materials because of high inflation. Are we seeing aggressive inflation management control? The next one is also industry policy and also incentives, tax incentive for players in this industry. Are we seeing that as well? Are we seeing quality controls and standards to ensure that the products meet up to certain quality standards to ensure safety of these buildings? Are we also seeing the government also trying to prioritize the use of this these locally manufactured products in government projects? So all of these factors are things that we should also look at to ensure that we are able to accomplish this initiative or this idea of ensuring that locally manufactured goods are here to stay, or locally manufactured goods are explored or are much more focused on, and also access to affordable financing as well. We're currently operating a double-digit interest rate environment, and because of that, we are seeing companies having working capital challenges. They cannot expand as much as they would. So access to affordable finance is also key to expanding or also consolidating this initiative in the long run.
Ayo, how much local content in home building materials would your industry be able to want to see happen?
So back in...
Or do you think everybody just concentrating more on real estate? Nobody wants to do building materials?
Oh, I did send through some charts. I don't know if you got them, but we have increasingly seen local inputs, local content over the last 10 years. Now, it's not moving at the rate at which we would prefer, but with the president coming in now suggesting political will, we can expect that to ramp up. But let me take you to 2005. I can go Ethiopia or Chile. Okay, let's go Ethiopia. They developed the integrated...
My producers just put this out there. That's imported versus local.
Yes,
it looks like an Olympic race.
Yes, and there's another chart.
I can see who is winning.
Yes, and there's another chart that just shows how each sector has grown over the years. But Ethiopia developed in 2005 an integrated housing development program. And what they did, which is similar to the import substitution strategy the president appears to be suggesting, is they developed 7 districts, and they tasked each of these districts with developing local content, as you would say. And they did that over a couple of years, and as of today, they've been able to put together 300,000 housing units, which they would not have been able to do if they didn't have that local content. Now to your overall question.
So we got to be deliberate.
It will take some time, but we have to be deliberate, and more importantly, I think we also have to be consistent. Once we are taxing, we have to get full speed, and then we need to take off.
That's what you're talking about, the construction materials. Yes.
Materials imported, and we stand the chance of saving an increasing amount of this. Now, as of 2023, the construction materials imported is about $8.1 billion. dollars.
In USD.
Yes, because we do a lot of importation, and it's really more on the side of the machines. As time goes on, I think the machines and the replacement parts might take a bit longer to get rid of in terms of having local content. But I think as Dangote and BUA Group have shown us, we can take on cement. We're about 80% local.
Yeah, because I'm looking at this. Look at steel. Glass, for example.
Yes.
Let's all do glass in Ondo State.
Yes.
And all that. So we can do glass.
Yes.
No planes and all
yes,
that.
we can
But
do
glass.
glass
Used to be listed on the stock exchange.
Yes,
And
they did
yes,
have
ceramics.
Yes. So what we import a lot of, again, is finishing materials, because they are a bit more delicate. They need more specialized machinery and talent to get done. And if we're able to bring that in, we can save all that resources that you're seeing there and then deploy to other areas, considering that our budget continues to wobble a bit.
We had a monetary policy meeting this week with the central bank. That was back on Tuesday. Interest rate held at 27.5. Borrowing costs for indigenous manufacturers of building materials. Let me start with you. You're the one on Market Street.
So yes, as we saw last week or earlier, we saw that the CBN retained all parameters, and we're still in a very elevated interest rate environment, and we do not see any potential of easing in the next few months. So how would this affect? So it's a no-brainer that now that we are seeing tightening or increase or elevated interest rates, it's definitely going to affect players in this manufacturing or this aspect of the manufacturing sector. And like I said, for people who are facing, or for companies that are facing working capital challenges, also having expansion challenges, because of this interest environment, they cannot afford to go to a normal commercial bank to get loans because it is quite expensive. And again, they're also competing with imported alternatives from countries that have like a low capital cost. So there's a bit of disparity, or there's a bit of disadvantage there when it comes to competing with these local or cheaper alternatives. And right now, like I said, they have to, until we see targeted credit facilities that would cater to these players, we'll most likely see investments in this aspect of the manufacturing sector still remain limited. We'll still see activity remain reduced, or we will still see declined activity in this space. But until we see access to affordable financing, yes, targeted credit facilities, PPP, that robust PPP that can also leverage on the skills of the private sector and also on the facilities of the public sector. Until we see that, most likely still see a bit of struggle in this for the manufacturing sector for building materials. For building materials, Ayo, exchange rate, when it was 300, 500, cost of housing is high in Nigeria. Now we're talking 1,500. 1,600. 1,600.
I mean, so we did do a study last year on the impact of the exchange rates and a few other factors on building material prices. And in short order, this just means that the cost, we do have a cost index there.
Two rivers that never meet.
They are not likely to meet.
And they're getting wider.
They're getting much wider, sir. But what we see is the end user, the eventual occupier or buyer, would have to spend a bit more per unit of housing. So what you will find increasingly as we go into next year is alternative methods of financing. Already, building committees are taking a large chunk of the funding for projects in country. Cooperatives are not doing too badly because interest rates going at the way they're going, exchange rates moving in that direction, will not encourage large-scale development. So what you end up finding are niche developments that are for upper middle and middle-income end users.
Okay. What about inflation? You want to put that in the teacup?
Is it the old inflation or the new inflation?
Inflation. Put inflation in the FX cup.
Is it the old inflation or the new inflation? Which are we talking about now?
Give me the new one. The rebased one.
I mean,
yes, put that to be 30 seconds.
The new inflation is still accelerating its speed, right? I mean, inflation has always been something we've had to deal with. Developers, investment managers have had to find a way around that, and I think they will continue to do so. It will still contribute to the eventual rate of increase in pricing of houses, and rents will go up much faster, sale prices will go up faster, and you will see the tendency to quote in foreign currency as opposed to local currency.
Don't go there.
No, I'm not. It's a tendency.
The central bank governor is watching.
Yes. Hello, sir.
If you call to USD,
Which is, for the record, incorrect. It is wrong. It is against the laws of the Federal Republic of Nigeria. But you get my point.
Yes, I get
inflation
that.
will just contribute to the total eventual cost of the end user.
Ayo, so Abigail, let me just finish with you. Housing unit deficit 16 or 30 million. What's the real figure? Can we do that in 30 seconds or less?
So we've seen the figures change over and over again. At some point it was 28 million homes that were in deficit. At some point it was 17 million. But it's a known fact that we are seeing a huge gap in the housing deficit. And bridging this gap in the short term may not exactly be realistic given the challenges that we have on ground. But at the same time...
But do you think this renewed hope agenda can help?
Yes.
Just take a fraction out of it.
Yes, so I mean we are seeing...
Ayo, doesn't seem... Why are you shaking your head? Well, I'm wrapping up the show.
I think it's a good start.
Yes.
But my estimation, and a few of us analysts have come together, until we get to housing production, and we're talking 5,000 to 10,000 units per annum. We really
start scratching the surface.
Yes, because we're having a population growth rate of 2.65 to 3% per annum on 230 million, and technically 3. And 20,000 units for me is a case of proof of concept, and then from there we scale to what we can do annually.
Okay, let's say thank you to Dangote and Rabiu. At least you've put something on the table. Maybe other cement manufacturers should also come forward. They should step forward.
Yes.
Lafarge Africa and the rest of them. They should
at 10,000 per bag, the air is pretty thin, so I don't know.
Oh, come on. Let's just say thank you to everyone. Shall we? Shall we? Thank you for bringing some housing to the table this morning. It's good having both of you, Abigail and I.